1H chart of the US pair on Monday. The US currency pair continued its downward movement with minimal volatility. A low volatility observed in recent weeks did not raise any concerns, as important macroeconomic reports have been scarce. However, yesterday, the US ISM Manufacturing Activity Index was released, published as a single estimate. Regardless of the report's importance, more significance lies in the relationship between the forecast and the actual value. We learned that manufacturing activity in the US declined again, despite forecasts predicting an increase. Thus, the report turned out to be much worse than market expectations, which should have triggered a decline in the dollar and a rise in the pair. Yet, we did not observe any growth in the pair again. Therefore, we emphasized to our readers that the current movement remains completely illogical, having persisted for more than a month, as in October we saw very few predictable movements. 5M chart of the US pair in the 5-minute time frame. Two trading signals formed yesterday near the 1.1527 level, but due to low volatility, neither generated any profit. We have said multiple times that if the price moves only 40 pips in a day, regardless of the strength of the trading signals, it is unlikely to yield profit. The market continues to push the pair down, despite the absence of any valid reasons for the move. How to trade on Tuesday? On the hourly time frame, the EURUSD pair exhibits a desire to continue its decline. A new ascending trend line has been broken, and the overall fundamental and macroeconomic backdrop remains unfavorable for the US dollar. Thus, based solely on technical factors, the European currency may continue to decline. However, the factoring on the daily time frame is still relevant, and we anticipate its conclusion and the resumption of an upward trend. On Tuesday, novice traders can comfortably trade in the 1.3102-1.3107 range. This is not just an area but also the lower boundary of the sideways channel on the daily time frame. The likelihood of a significant bounce is high, but without buying momentum, we will not see any upward movement in the market. On the 5-minute time frame, trading can occur at the following levels: 1.1354-1.1363, 1.1413, 1.1455-1.1474, 1.1527, 1.1571-1.1584, 1.1655-1.1666, 1.1745-1.1754, 1.1808, 1.1851, 1.1908, 1.1970-1.1988. On Tuesday, no significant events or reports are scheduled in the Eurozone or the US, so it is unlikely volatility will rise today, leading to significant trend movements. Basic rules of the trading system. The strength of a signal is determined by the time it took to form, bounce, or breach a level. The less time required, the stronger the signal. If two or more trades around any level were based on false signals, all subsequent signals from that level should be ignored. In a flat market, any pair can generate numerous false signals or none at all. In any case, it's best to stop trading at the first signs of a flat market. Trades should be open during the time frame between the start of the European session and halfway through the American session. All trades must then be manually closed. On the hourly time frame, signals from the MACD indicator should ideally be traded only in the presence of good volatility and a trend confirmed by a trend line or trend channel. If two levels are too close to each other between 5 and 20 pips, they should be treated as a support or resistance area. After the price moves 15 pips in the right direction, a stop loss should be set to break even. What the charts show, support and resistance price levels are targets for opening buy or sell positions. Take profit levels can be placed near these. The red lines indicate channels or trend lines that show the current trend and suggest the preferred trading direction. The MACD indicator 1422.3 provides a histogram and signal line, serving as an auxiliary indicator that can also be used as a source of signals. Important, significant speeches and reports always listed in the news calendar can have a significant impact on the movement of the currency pair. Therefore, during their release, one should trade with maximum caution or exit the market to avoid sudden price reversals against the preceding movement. Beginners trading in the forex market should remember that not every trade can be profitable. Developing a clear strategy and practicing money management are key to long-term success in trading. The material has been provided by robotfx.org.